trillions of Shiba Inu tokens are gone. Today marks a very important day in crypto history. Big players keep dumping their hundreds of millions of US dollars on the market, but this is just the beginning of the story. Shiba Inu is about to do something completely unexpected. But what am I talking about? And what does it have to do with BlackRock? Well, let me explain. Disclaimer. As we discussed in the previous video on this channel, in an unexpected twist, Bitcoin ETFs have seen the fourth consecutive day of outflows, driven by significant selling of Bitcoin by Grayscale. This surprising development has sent ripples through the cryptocurrency market, affecting not only Bitcoin itself, but also other altcoins like Shiba Inu. As many of us are aware, Shiba Inu tends to mirror the movements of Bitcoin closely, reacting strongly to developments in the Bitcoin ecosystem. This correlation is particularly evident in times of significant Bitcoin activity, such as the recent streak of outflows from Bitcoin ETFs. So, it's no surprise to see similar patterns reflected in Shiba Inu's price chart, as it reacts to the broader movements within the crypto space. This interplay between Bitcoin and Shiba Inu underscores the interconnectedness of different cryptocurrencies within the market and highlights the importance of keeping a close eye on developments across the board. And here's something interesting. While Grayscale continues to offload its substantial Bitcoin holdings, there's been a noteworthy trend emerging. Despite this dip, 9 other ETFs have been experiencing consistent inflows, indicating a divergence in investor sentiment and strategy within the cryptocurrency market. Just take a look at this fascinating chart. BlackRock's Bitcoin holdings are steadily approaching the levels held by Grayscale. While Grayscale's continuous selling exerts significant downward pressure on the crypto market, BlackRock appears to be steadily increasing its Bitcoin reserves, albeit at a slower pace, but with notable confidence. This dynamic between Grayscale's sell-offs and BlackRock's accumulation highlights the contrasting strategies being employed by major institutional players in the cryptocurrency space. While Grayscale's actions may temporarily influence market sentiment, the gradual rise of BlackRock's holdings suggests a growing confidence in Bitcoin's long-term potential among institutional investors. And now, believe it or not, BlackRock has already managed to amass a staggering 1% of the total supply of Bitcoin. This achievement is truly remarkable and would have been deemed unimaginable just a few years ago. And that is so true. Just imagine a bustling city where a revolutionary new technology emerges, promising to change the way people interact and transact. However, many of the city's wealthiest and most influential figures, including financial giants like BlackRock, dismiss this technology as a passing fad, labeling it as nothing more than a scam or a bubble waiting to burst. Despite the skepticism, a few visionary entrepreneurs and tech enthusiasts believe in the potential of this technology and begin investing their time and resources into developing it further. Years pass, and the technology gradually gains traction, proving its worth through real-world applications and widespread adoption by the public. Then, in an unexpected twist, BlackRock, one of the city's largest financial institutions, announces its intention to embrace this technology. This move shocks the community, as BlackRock had been one of the loudest voices denouncing the technology as worthless. However, once BlackRock reveals its plans to launch a new financial product based on this technology, the tide begins to turn. People start to see the legitimacy and potential of this once-dismissed innovation. The approval of BlackRock's product by regulatory authorities further validates the technology's credibility. Suddenly, hundreds of millions of dollars start flowing into the market every day, as investors rush to get a piece of the action. The city's financial landscape undergoes a massive shift, with the technology that was once ridiculed now hailed as the future of finance. So that's pretty much what happened with Bitcoin. In this scenario, BlackRock's entry into the Bitcoin market represents a paradigm shift in the perception of cryptocurrencies among traditional financial institutions. Despite initial skepticism and opposition, the approval of their Bitcoin ETF signals a turning point, leading to a flood of institutional investment and widespread recognition of Bitcoin's value and potential. And here's something interesting. Due to the unexpected twists in the cryptocurrency space, Shiba Inu has experienced a flurry of activity in recent days. A staggering 2 trillion Shiba Inu tokens have been transferred between various entities, including whales, exchanges, and trading desks. Whales, along with a handful of crypto exchanges, have been orchestrating these movements. For instance, in one notable transaction, a whopping 77 billion Shiba Inu tokens were transferred to Coinbase, while another 412 billion Shiba Inu found their way into CoinOne's hot wallet. But the activity doesn't stop there. A colossal transaction involving 500 billion Shiba Inu was sent to a cryptocom, further highlighting the scale of movement within the Shiba Inu ecosystem. Transactions of this magnitude often signal significant shifts in investor sentiment, with many interpreting such movements as an indication of holders deciding to sell their holdings. And here's something they probably didn't see coming. Recent analysis suggests a fascinating development concerning Shiba Inu's relationship with Dogecoin. According to a prominent analyst, Shiba Inu's historical attachment to Dogecoin could potentially lead to a significant rise in Shiba Inu's value by 20% in the coming days. This prediction comes on the heels of Dogecoin's notable price surge, which has seen its value increase by over 20% in the past 48 hours, widening the gap between Dogecoin and Shiba Inu in terms of market cap rankings. The analyst, known as Crypto Money King, suggests that Dogecoin's rise could trigger a similar upward movement in Shiba Inu's price. Drawing on historical patterns, the analyst expects Shiba Inu to follow in Dogecoin's footsteps with a 20% increase of its own in the near future. And Shiba Inu will need to gather momentum swiftly for the prediction to materialize. However, the analyst warns that this setup could be invalidated if Shiba Inu's price falls below a certain price level. Nevertheless, Shiba Inu has maintained trading above this level in the past 24 hours, bolstering the likelihood of the projected surge. Recalling the recent competition between the two coins, where Shiba Inu nearly surpassed Dogecoin, the potential for Shiba Inu to recover lost ground is palpable. Should this prediction come to fruition, it would undoubtedly bolster Shiba Inu's efforts and reignite the rivalry between these two meme coins. And amidst the actions of Shiba Inu whales potentially deciding to part with their holdings, a thought-provoking insight emerges. It's about Bitcoin, but is applicable to Shiba Inu's current situation too. Twitter user succinctly captures this sentiment in a tweet, highlighting the greatest fool theory underlying Bitcoin's value proposition. This theory suggests that the refusal to adapt to the changing landscape of financial markets, coupled with an over-reliance on past performance of traditional assets like real estate and stocks, may lead to missed opportunities in the burgeoning cryptocurrency space. Essentially, the tweet implies that those who fail to recognize the transformative power of Bitcoin and other cryptocurrencies may ultimately find themselves buying in at a higher price point, paying the price for their skepticism and short-sightedness. While this perspective may come across as cold and logical, it serves as a stark reminder of the importance of embracing innovation and staying abreast of evolving market trends. In the context of Shiba Inu, this insight underscores the potential for growth and the risks associated with underestimating the significance of emerging digital assets. However, before doing that, always remember to do your own research and talk to your financial advisor. But what is your opinion on that? Comment down below. I'd be eager to read your opinion. If you are curious to find more, then make sure to click on one of the videos you see on screen. And with that, we come to the end of this video. If you enjoyed the video, then please like this video, and don't forget to leave a comment in the comment section. This really helps me with the YouTube algorithm. Also, please share this video to as many people as possible. Let's get this news out there.